The traders at UBA expect a sustained bullish trend witnessed at the Treasury bills market to persist, with buy interest inclined to the August bills. Chuka Nwachukwu, head ALM and Balance Sheet Management at UBA, joins me now for more market movements. Chuka, thank you for joining us today.
Thank you, Esther.
Well, the final trading day for the weekend from the month of August for the market. Talk to us, bring us up to speed on trading today. Let's start with market liquidity levels and, of course, that CRR debit that happened at the market.
Yeah, thank you, Esther. Today markets, like you rightly mentioned, has been still very bullish. We've seen a lot of liquidity, despite the fact that CBN offered two consecutive days, well over 1.6 trillion, left the market as a result of these two offer. So on the other end, we also saw bullish sentiment on the T-bill side. On the 1 year, for example, the 21st August is, is quite attractive, and that's where most of the bullish sentiment is. On the bond side, we saw bullish sentiment on the auction bond, the 2029, 2031, and then 2033. So this is as a result of, the increased system liquidity. CBN reacted, yesterday by CRR debit, but then markets still opened today above 600 billion.
All right. I wanted to also ask you the August bond, the 1 year bond. I wanted to ask you what the rate is going for right now, and of course, obviously, it's a bit of a big appeal for investors. But where's the rate at?
I mean, you mean the T-bills, 1 year bill?
Yes, Treasury bills, yes. The 1 year Treasury bill. Yeah,
so the NTB is currently trading around upper 17 levels, 18 levels, and that shows you that the yield has greatly declined. This also has also affected investors' confidence as well, because, carrying a 1 year bill at 18%, is quite lucrative rate, judging the fact that we begin to see decline in inflation. And then, of course, it's also expected that the next inflation will further decline. And so the market has actually reacted to it by seeing yield decline. On the OMO bills, we saw about around 21%, 22% levels. And don't forget, this was the same instrument last week that traded around 24%. And so what does that tell you? It means that, the high yield regime, if I may use that word, is gradually coming to an end. And then, of course, buoyant with the system liquidity, we saw this bullish sentiment in both market, T-bills and bond market.
Well, that being said, investors will be looking forward to comments from the MPC at the next meeting. I believe that's going to also happen in September. What are market expectations? It's still a couple of weeks away, but what are market expectations, of course, what it could potentially mean for the interest rate environment?
So if you watch the market expectation, especially as regard inflation, you see that each time there's a change in inflation, either goes up or comes down, the CBN react. And so the expectation is that the next inflation figure, will also further reduce. Further expectation is that by December, we still have about we have inflation figure reduced to about 25%. So markets has also started reacting to that, and that's why you see that we've seen bullish sentiment in both markets. Investors' confidence is also has also reacted to that, and then most especially on the 2033 bond. Don't forget that this bond was on offer last week, and then again, a lot of people lost at the auction. So the pressure came into the secondary market, and that has decreased and or depressed the yield further.
All right. Also, quickly bring us up to speed on trading at the FX market today.
So currently, the FX market is trading around the 1593 levels. The markets appreciated, and this is due to the fact that the corporate bond issue is actually affecting the FX market. We've seen the market, really bullish, liquid, and that also has affected the rate. So it's been trading between 15 levels and then 16 levels, but currently is at 1593 levels, and we're hoping that this will continue and then see the rate come down more, especially with the fact that system is liquid, in terms of FX, and then CBN also has continued to demonstrate the fact that they can defend the naira.
All right, Chuka, we'll leave it there. Thank you so much for bringing us up to speed. Appreciate your time on the show today. Chuka Nwachukwu, head of ALM and Balance Sheet Management at UBA.